Welcome to Iron Financial. Our mission here is simple, to help you forge a stronger portfolio and cut right through all the market weakness. Today, we are drilling down into a real head-scratcher, Micron Technology. Look, they just released what should have been an absolutely legendary earnings report, a report that screams strength from every single line item. I mean, it's flawless. But in the face of this overwhelming victory, the market blinked. The stock actually sold off. Now, this isn't just a simple beat and raise story. This is a genuine paradox. It's a puzzle that tells a much bigger story about the AI revolution, about hidden investor fears, and about the colossal price of building the future. So let's get into it.
All right, let's just cut through all the noise for a second. Here's what I'm seeing, and it's pretty stark. On one side of the screen, you have a company that is printing money hand over fist, a complete and total blowout quarter. On the other side, you've got a stock that gets hammered, shedding billions of dollars in market value literally overnight. These two pictures, they just don't belong in the same frame. It makes absolutely no sense. You know, when a company reports a flawless victory like this and the market punishes it anyway, that's not just a red flag, that's a full-blown warning siren going off. It means Wall Street is looking right past today's triumph and is bracing for a war tomorrow. And my job here is to figure out what that war is.
Precisely. That is the million-dollar question, isn't it? Wall Street isn't emotional. It's a calculator. It's just a machine that's constantly pricing in future risk. So the puzzle we have to solve today is this. Is this stock drop a massive overreaction, maybe creating a generational buying opportunity for those of us who are paying attention? Or are the algorithms and the big funds correctly sniffing out some serious cracks in what, on the surface, looks like an ironclad foundation? Now, to get our answer, we can't rely on headlines or hot takes. We have to forge our analysis from the raw data itself. So let's build this whole thing from the ground up, starting with the undeniable strength, the bull case.
Right, the bull case for Micron isn't built on flimsy hype or some wild future projections. Now, it's forged from the hardest steel of their actual Q2 results. And I want to be clear here, these are not just good numbers, these are generational numbers. This is a company that is operating at the absolute peak of its power, and it's all being driven by this unbelievable tidal wave of AI-driven demand. We're going to build this case brick by brick, piece by piece, starting right at the top with revenue.
$23.86 billion. Just let that number sit there for a second. That's their revenue for one single quarter. You know, Wall Street's smartest minds, the analysts who do this for a living, they were hoping for maybe 20 billion. Micron didn't just beat that number, they completely vaporized it. We're talking about a nearly $4 billion surprise. That isn't a beat, that is a declaration of complete and utter dominance. It proves that the demand for their technology isn't just hot, it's absolutely scorching. Now let's look at the velocity, the speed. 196% growth over last year. Their revenue nearly tripled in just 12 months. This is not the slow, steady churn of some mature industrial company. No, this is hyper-growth. This is exactly what it looks like when the AI supercycle stops being some story people talk about and it starts printing cold, hard cash. The engine is redlining, and all the competition is just a speck in the rearview mirror.
And this number, honestly, this should have been the kill shot for any of the bears out there. 75% gross margin. That's a company record. To put that in perspective, a year ago it was 38%, so it pretty much doubled. This is what pure, uncontested pricing power looks like. It means your customers are so desperate for your product, they will pay whatever you ask for it. Micron's isn't just selling more chips, they're selling them at fortress-level profits. This number right here is the bedrock of the entire bull case.
Now just look at how that massive revenue translates all the way down the line. Revenue tripled, okay, we covered that. But look at net income, the pure bottom line profit. It didn't just triple, it exploded by nearly 9 times, from $1.5 billion to almost $14 billion. That's the incredible power of those margins we just talked about. This is not incremental improvement, this is a quantum leap in profitability. Every single metric that matters is going vertical. This is what a fortress of financial strength looks like on paper.
And you know what? You don't have to take my word for it. The CEO himself, Sanjay Mehrotra, he laid it out perfectly. Records, across the board. And he points to 3 pillars holding it all up: strong demand, tight industry supply, and their own strong execution. This is the absolute perfect storm for a company like Micron. It means they are the right company with the right products at the exact right moment in history. And that execution part, that's crucial. It means they are capitalizing on this incredible opportunity without fumbling the ball.
And let's be perfectly clear about where all this is coming from. These numbers are not happening in a vacuum. They are being forged in the very heart of the global AI build-out. Every single dollar of that record revenue is directly tied to the construction of these new data centers. I mean, these are the factories of the 21st century, and Micron's memory chips are the steel, they are the concrete, they are the essential raw material. Without their chips, the AI revolution literally grinds to a halt. That is the bull case in a nutshell. You have indispensable technology meeting what really looks like infinite demand.
An indispensable empire, okay, maybe. But every single empire in history was incredibly expensive to build and, you know what, even more expensive to maintain. That perfect storm that the bulls are celebrating so much, to a skeptic like me, it looks a lot like the peak of a hurricane. It's really easy to look strong when the wind is at your back. The real test is what happens when that wind shifts, and the market, by selling off, is betting that it's about to shift and shift hard.
This right here. This is the question that sends a chill right down Wall Street's spine. Those record profits are fantastic, nobody's denying that, but they come with a monumental price tag attached. Building the fabs, the clean rooms, the bleeding-edge manufacturing facilities that are required for this next-generation AI memory, it's one of the most capital-intensive, most expensive endeavors on the entire planet. So the market isn't just looking at the money that's coming in the front door, it's looking at the mountain of money that's about to go right out the back. And there it is, the mountain, $25 billion. And that's just a minimum they plan to spend on new factories and equipment this year alone. Let that number really sink in for a second. Their entire revenue for this record-smashing historic quarter was actually less than that number. They are committing to spend more in 1 year than they just earned in their best quarter ever. This is an all-in bet. They are betting the farm that today's AI gold rush isn't just some temporary boom, but a new, permanent reality.
And it doesn't stop there. The stakes just keep getting higher and higher. This is not a one-time bet. Management has already come out and signaled that this spending will increase again in 2027. So we're talking about a multi-year, multi-billion-dollar commitment. They're pouring the concrete now. And this right here is what has the smart money so spooked. Because you have to ask yourself, what happens if this AI demand cools off even slightly while they're locked into this historic level of spending? Those beautiful 75% margins we were just celebrating, they could vaporize, just gone, overnight.
And you know, history really matters here. As you can see, this isn't a one-off event for Micron. The stock has now dropped after 4 of its last 5 record-breaking earnings reports. It's a classic sell the news pattern. All the high expectations get baked into the price, and then even perfection isn't good enough. But it's more than that. It shows that seasoned investors, the ones who have been in this notoriously cyclical industry for a long time, use these moments of peak strength as an exit ramp. They're selling into the good news because they know what history says always comes next, the inevitable downturn.
This quote from FX leaders absolutely nails the core fear. The memory industry has always lived by one brutal rule, the boom and bust cycle. Prices skyrocket, so companies spend billions and billions building new factories. All that new supply eventually floods the market, and then prices crash. You rinse and repeat. The bears are betting that not even the AI revolution can break this age-old cycle. They see this massive spending spree as the classic fatal mistake, building new palaces at the absolute peak of the empire just moments before the fall.
Okay, that's the bear argument, and I'll admit it's built on a solid historical foundation, but it has one potentially fatal flaw. It assumes that the old rules still apply. It treats AI as just another demand driver, like PCs in the 90s or smartphones in the 2010s. I would argue that AI isn't just another cycle. It is a fundamental, structural shift in everything, a great multiplier that changes the entire equation. It's the one variable that could finally, for the first time, break that boom and bust pattern for good. The evidence is right here. It's in the order book. We don't need to guess. We don't need a forecast. Micron's most advanced product, that's the high bandwidth memory that is the literal lifeblood of AI, is completely sold out for the rest of this year. Not just for this quarter, for the entire year. And they're already booking deep into 2027. This isn't cyclical demand that could disappear next month. This is a structural shortage. The world's biggest companies are locked in an AI arms race, and Micron is one of the only arms dealers on the planet. And this is exactly why that massive spending isn't a reckless gamble. It's a calculated necessity. You cannot meet this new wave of demand with old technology. It's impossible. Just look at the complexity of modern chip manufacturing. This is why the price tag is so astronomically high. They aren't just adding a few more assembly lines. They are building an entirely new generation of factory, from the ground up. It's expensive for one simple reason. What they are building is light years ahead of anything that came before it.
And the product mix itself tells the story of why this is so profitable. 79% of their revenue comes from DRAM. Think of it this way. DRAM is the super fast, short-term memory a computer uses for active tasks. It's like the workbench space for a genius. For AI, you need a massive, pristine, incredibly fast workbench. NAND, on the other hand, is for long-term storage. It's the warehouse. It's important, sure, but it's slower and way less profitable. The global shift to AI means the world is demanding more of the high-margin workbench space, and Micron is the prime supplier of it.
So there we have it. We've laid out the two powerful opposing forces. The battlefield is crystal clear. On one side, you have the undeniable reality of record-breaking financial performance. It's driven by a once-in-a-generation technology shift. And on the other side, you have the ghost of cycles past and the absolutely staggering cost of betting that this time it really is different. So the big question remains, is this stock an opportunity or is it a trap?
And this really frames the entire debate perfectly. The bulls look at Micron and they see a company laying the foundational steel for the entire AI future. They see all that spending not as a risk, but as the necessary price of locking in a decade of market dominance. And the bears? They look at the exact same picture and they see a gambler pushing all their chips onto the table at the very top of the market. They see a classic story just repeating itself, overbuilding at the peak and leaving shareholders to pay the price when that cycle inevitably turns downward.
But let me leave the bull case with one final and I think crushing piece of data. Just look at the cash. In the very same quarter that they burned through $5 billion building these new fabs, they generated almost $7 billion in free cash flow. So even while they're funding the most aggressive expansion in their entire history, they are still a cash-printing machine. The business is so powerful it can pay for its own future and still have billions left over. Now that is a level of financial fortitude that can weather almost any storm.
And that brings us to the final question that you, as an investor, have to answer for yourself. There is absolutely no doubt that Micron is at the epicenter of the AI revolution. Their technology is critical, it's essential, but revolutions are volatile, they're messy. The paradox of the stock dropping on this stellar news tells you that the market is deeply, deeply divided on this. So you have to decide for yourself. Are you looking at a company building a solid, ironclad foundation for a decade of growth, which would make the current stock price a bargain? Or are you looking at the absolute breathtaking peak of a classic semiconductor cycle, making this a very dangerous trap? That's what you need to decide.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.